Well, hello, good afternoon. Welcome to this Institute of Economic Affairs live stream hosted by myself, Mark Littlewood, the Director-General here at the IEA. We're going to very swiftly and pointedly answer the question, are tax rises the answer to COVID spending? As some of you might have seen, the Resolution Foundation think tank today released a report laying out the need for a massive round of tax rises on businesses and individuals to pay off the debts incurred from the COVID response and also to increase spending on social care. The Office for Tax Simplification have also come up with a range of proposals. Is this the right solution, or is this a poisoned pill to an already sick patient? To navigate our way through this, I'm joined by three very good friends of the IEA, all from different think tanks. I'm joined by Tom Clougherty, Head of Tax at the Centre for Policy Studies. Hello to you, Tom. Matt Lesh, Head of Research at the Adam Smith Institute, and Duncan Simpson, Research Director at the Taxpayers Alliance, to help us get to grips with this. Duncan, let me start with you. The Taxpayers Alliance has the hardest task of any think tank or campaigning organisation anywhere in the United Kingdom at the moment, doesn't it? Tax rises are coming, winter is coming. What's your argument against? Tell us why tax rises might not be the right answer to the spending.
You're right. I mean, we're going to be very busy for the coming years with this. My concern is twofold. The first of which, and this comes out of various thinking in the last couple of days, not least the report from the Office for Tax Simplification on capital gains tax, as well as the Resolution Foundation doing a big offering for this, is that if the objective of the government is to seek some degree of increases in taxes, that necessarily diminishes the pressure on them to find some spending cuts. Now, in an ideal situation, we would return to some of the key TPA policies of scrapping HS2. Now, unfortunately, I don't think that's realistic anymore. We are pretty far in the legislative process for building not merely up to Birmingham, but Birmingham up to Manchester and so forth. But it doesn't necessarily have to be these very, very big ticket projects. So, for example, there could be changes to quite a few benefits which currently are means tested. Now, there might not be massive changes. So, for example, with bus passes for the over 60s, it's around about £2 billion. But there's no particular rationale why a pensioner sitting in South Kensington should have access to a bus pass relative to someone who might have much greater need for it in many other parts of the country. So that's one area for it. And I think that the second concern that I would have is absolutely why we shouldn't be going for tax rises, is that already the tax burden in this country is particularly high. If you look at national account taxes, so that incorporates current receipts, which is sort of most areas of taxes, as well as things like government assets, which they sell. Already it's the case that the government is pretty much at a 50-year high. So that means proportionately, I think it's about 34% of the economy of national accounts taxes relative to GDP. And that's obviously deeply pernicious. So, when you see quite dispiriting polling of many members of the public, indeed a big majority of the public, being relatively in favour of tax rises, it's particularly important that we present those two arguments time and time again, in terms of we cannot let the government off the hook for not choosing to lower the size of the state in areas which should have happened generations ago but haven't yet materialised, as well as recognising that already it's the case that taxpayers are being shafted in a variety of areas. So we can't let the government off the hook. But you're right, it's a pretty hard sell, but we'll give it a try.
Tom, let me come to you, Head of Tax at the Centre for Policy Studies. What's the right starting point for those of a free market bent here? As Duncan says, taxes are colossally high as a proportion of GDP, perhaps the highest they've been for half a century. But the other part of me says, I've spent most of my 10 years here at the IEA insisting that the government's got to balance the books. We've spent billions and billions and billions on furlough schemes and job support schemes and all of the rest. If we're going to balance the books, well, the gain of the public sector spending money needs to be offset by taxes going up, right? You can't have one without the other.
Yeah, sadly, I think there's something to that. I think it's important to stress that, even in this Resolution Foundation report that came out today, they're not suggesting immediate tax increases. I think they're talking about laying out a path for fiscal consolidation and tax increases only coming in gradually from sort of 2023 onwards. So I think that certainly should be a starting point. The very last thing we want to do when we're still suffering quite severely economically from the impact of COVID would be to hike taxes now I think that would have the problem of choking off any recovery which may be coming around the corner. But then it's also the question of, do we accept that premise? That the only way to deal with the increase in spending that we've witnessed over the last year or so is to raise taxes. I know all of us on this call would say, no, we shouldn't accept that premise. That, contrary actually to what they say in the Resolution Foundation report, the best way, the evidence suggests, to do a fiscal consolidation is through spending cuts. And if there do have to be tax rises, then you have to be very, very careful about where those tax rises fall, because if you do the popular thing, the thing that polls would suggest you do, you'd look at corporate profits, you'd look at individual investment income, and maybe go and very high incomes, go for swinging tax increases on those. Now, the thing is, they don't generate all that much revenue, and they also have an outsized impact on growth. So you're really cutting the legs out from under the economy. You're maybe making things worse. It's important to stress, actually, the Resolution Foundation report doesn't say that. I think, to their credit, they lay out something that, personally, I wouldn't agree with, wouldn't advocate, but they do recognise that if you're going to sustainably raise a large amount of revenue, it basically has to be through broad-based taxes on income or consumption. And if you contrast that to another interesting tax report that came out a little while ago from Demos, which was all about polling and the public's opinions on where you should raise tax, where you shouldn't, it was sort of fascinating as an insight into the British public's psyche on these things. But actually, you can sum it up in a very simple way. The public support taxing other people. Yeah. And to their credit, as I say, Resolution hasn't done that. They say, if you want to raise this extra 40 billion, the lion's share is going to come from a broad-based tax that all of us are going to end up paying. Like I said, don't like that idea. I think we have to be realistic about the reception this sort of thing will get in government, though. Certainly we have a fight on our hands to advocate pro-growth tax reform, sort of fiscal responsibility, and not just raising taxes before the end of the Parliament.
Matt, the Resolution Foundation report says in it, and I quote, tax rises tend to harm the economy less than spending cuts, and the performance of public services is already low. Consolidation should therefore be done primarily through the tax system. I don't think I've ever seen a couple of sentences that more perfectly encapsulate Friedrich Hayek's Road to Serfdom, right? However bad the public services are, you can't knock a penny off them. So if the only trajectory is forever more.
I'm glad Resolution is acknowledging the need to reform public services. It's really good to hear. Maybe we could start having some debates about our precious NHS, but perhaps for another day. I mean, I think to start with, the Resolution Foundation are right in the sense to identify that we do have longer term fiscal challenges. We're not all modern monetary theorists yet. We can't just keep on spending forever. There is going to be a crunch point here. And this is an important reminder of that as the government does look to spend more and more money. And it's not necessarily the crunch point caused by, let's say, the furlough spending, which is relatively one-off. It's the risk of ongoing fiscal issues for the government caused by potentially a smaller economy over the medium term, as well as more kind of spending pressures that gives you a kind of structural deficit. And that's the danger zone. That's the point we were in the 2010s, and that's the reason why the government had to do something. And they're also right about the need not to raise taxes straight away. Now, what they don't seem to realize is by flagging the increase in taxes, you're effectively just increasing the taxes straight away, because businesses are going to respond to the incentives that they can see down the track. You're not going to invest today if you think your profit's going to be more taxed in the future. So if anything, the government needs to be very, very wary about pre-announcing or flagging in advance any kind of tax rises. And in terms of the direct quote there about what works, what is good austerity versus bad austerity here? First of all, they don't seem to realize that austerity is not just cutting government spending. Austerity is also increasing taxes. It's two sides. And unfortunately, both will contract the economy to some extent. What we do actually know, and despite what they're saying, is ultimately spending cuts actually do not have an outsized economic impact. If you want to reduce the size of debt over the longer run, you do need to cut spending. If you just increase taxes, you're going to have a smaller economy, and therefore you're not actually going to get down debt. And there's some quite good studies on this. There was a great book out last year that actually looked at austerity and looked at, I think, 18 different countries and very specifically tried to unpack this point, and found over time, quite consistently, you cannot, under any circumstances, increase taxes to get out of austerity. It just doesn't. I'm sorry, you cannot increase taxes to get out of government debt. It just does not work where it's been tried.
So, Duncan, let me come back to you. I think I'm going to oversimplify the argument here, and I'd like to hear each of our guests' thoughts on it. But my argument goes something like this, that we're at the taxable limits of the UK economy. So if you like, in aggregate terms, we've got a Laffer curve argument. I mean, it might be that you can alter individual taxes in a certain way. But if you look back over my lifetime, best part of 50 years, no government has managed to extract from the private sector of the economy a higher proportion of income than it's extracting today. And the most you could hope for is some wizard wheeze to dial that up by a very short whisker. So I'm sort of presenting it not as an ideological point, as an empirical one. You just can't, it can't do any more heavy lifting tax. If we were in a Thatcher Blairite type position now, you could potentially say, oh, well, there's much more taxable capacity left. But it seems to me we're not on the floor, we're on the ceiling as far as tax goes, right? So spending reductions are going to have to be the way forward structurally over the long term. I'm more relaxed about the one-off hit of furlough schemes. I'm much less relaxed about pensions time bombs, social care time bombs, and all of the rest of it.
I think that's basically correct. And if you look at the latest OBR data, I think the expectation for national account taxes as a proportion of GDP is to increase gradually every year of this parliament out to 2025. Now, no doubt there will be voices within the Conservative Party and certainly in the opposition which say not necessarily we need to, the ambition should be for a Scandinavian model of around about 50% of the economy is the estate and with a tax base to match that. But, it does beg the question why we haven't really pursued this in the past. And, let's consider that I think with John Major, I think we finished on sort of 27, 28% GDP. And obviously that was ramped up quite substantially, but over a 12 or 13 year period with New Labour. So that was a very clearly laid out programme, which they've been alluding to for years and years. And I think, having that kind of ambition as the government still does with their levelling up agenda is quite dangerous. So that capacity, I think, is basically there. One concern that I do have, though, is that I think there'll be quite a few changes which we haven't quite clocked yet. So, for example, with the Resolution Foundation report, they suggest unfreezing fuel duty. Now, that's been frozen. I think Osborne froze that 7 or 8 years ago, I think it was, and you get quite a few voices who are against that, saying this is cost the UK many billions of pounds. Of course, it saved motorists exactly the same number. But I think that particular tax is one example where we haven't really considered what are the consequences. So, for example, I think the expected revenue from that is about 28, 29 billion pounds this year. Ultimately, if that's going to be married with the government's objective of net zero and much greater use of charging points and elimination of petrol and diesel engines, that's a big whack of revenue which the government currently enjoys. So, where is that going to come from if the government is planning to continue with a lot of their spending plans which are laid out in March before the current objective? Does it mean that they eliminate that entirely and seek an alternative, or is that a push for them to really consider, well, actually, we have various unnecessary programs in various departments, and so therefore let's really try and eliminate that? I think for me that's an equal concern of where we are, not merely in terms of the aggregate picture, but exactly how the taxes which they are raising at the moment, how that will change in the coming years and decades ahead.
Tom, are we at the taxable limits of the UK economy? Give or take a billion here or a billion there, as Ronnie Reagan used to say, a billion here, a billion there, and before you know it, you're talking real money. But I mean, in broad terms, are we at the taxable limits of the UK economy? Because if so, a different solution has to be found. You can write reports, however well-intentioned and however articulate and well-researched, but the heavy lifting's got to be done on the spending side, if my rough hypothesis is correct. Do you agree with my hypothesis?
Well, I think there's two ways to look at it. I think, in all honesty, economically, it's unlikely that we're at the absolute limit of how much tax we can raise in this country. But it's not really about economics, it's about politics. Are we at the political limits of how high the tax burden can go? And I think if you look at the track record, it does seem difficult for British governments to push it far beyond the current level. And I know that sometimes the purists at the TPA and the IEA take issue with my own tax report, because I kind of take my research, I take the tax burden as a given. As much as I would like the state to be smaller, I'm still a good libertarian boy like that. I sort of recognize the difficulty in the short term and also some of those long-term demographic pressures. So for me, the challenge is if we take the tax burden kind of as a given, Are there ways that we can shift the composition of that tax burden to boost the economy, to increase economic growth? And I think that we can do that, and I think that's where the helpful focus would be, because that is a way of growing the pie. And if you still take an equal size slice of it, you've got more to deal with some of those spending pressures that you have. And what that would entail basically is trying to shift away from taxing investment towards taxing consumption, towards, roughly speaking, lower tax rates and broader tax bases. But the trouble is, of course, politics tends to push in the opposite direction. As I said, what's popular with the public is precisely those things that don't raise much revenue and do harm our economic growth prospects. And so this economics and politics are really in tension here, I think.
But before I come on to Matt, let me just press you on this. I don't remember IEA purists calling you the Centre for Socialist Studies, Tom. I'm sure, and I think you've got,
no.
And I think you've got a perfectly good point. There are two different issues. One's the total burden, and the second is the mix of it. How you and I think it's fine to accept a burden of X for the. I mean, I want the tax code simplified and the tax burden reduced. But if I couldn't reduce the tax burden, I can see there'd be benefits of simplifying it as well. But in terms of the politics and the economics, okay, maybe for the sake of extreme argument, everybody wants the top rate of tax to be 95%. And the government read the opinion polls and say, right, well, we'll put up the top rate of tax to 95%. Well, that might go down very well in the polls, but it won't help them solve the fiscal hole, right? So, I mean, don't you think, Tom, that ultimately the economics win? I mean, because a year down the line, they'll think, oh, hang on, actually, our receipts from high earners have completely collapsed. We've got less money to spend on social care or furlough schemes or HS2 or whatever the hell it is they want to spend it on.
Yeah, no, I think that's exactly right. Look, as I said, if you want to raise significant amounts of money sustainably, not just a kind of 1 year hit when you take people by surprise, then it's got to be like everyone paying more income tax, everyone paying more VAT, roughly speaking. There are other things you could do as well, but those are the big ones. And of course, they're very unappealing. So then you run into the political limit. That's why I think actually it's quite a compelling argument that the only way we get out of the fiscal hole is to try and boost growth. And even though that does cut against maybe some of the public's instinct on tax reform, I do think that there's a decent case to be made there. And of course, we all try to make it. And just to quickly correct myself, I've never been publicly chastised, of course, by any of my friends and colleagues at other free market.
No, cool. We only do it behind your back, Tom. Obviously.
Yeah, well, no, just occasionally teased on WhatsApp that I'm going a bit soft in my middle age.
Matt, what's your take? Are we at, near as damn it, the taxable limits of the British economy? And kind of, if so, we're not really having an ideological discussion here. It's a matter of science and math, isn't it? That we've got to do the heavy lifting on the spending side, perhaps all of the lifting on the spending side.
It's kind of hard to know with any kind of precise metric. I suspect. And I haven't left the ASI yet, unlike Tom, but I suspect Tom's broadly right that we could raise a little bit more revenue if we want to, perhaps a large chunk more revenue, but that will not be costless. If we do try to increase taxes, particularly in the middle of an economic recovery that's going to take some time potentially, we're going to have a much slower recovery and a much smaller economy and potentially in the longer run, less revenue. So you can kind of probably worth splitting out there. You can have a short-term increase in revenue, but in the longer run, you might end up with a smaller economy, particularly if you have a badly designed tax system that pushes away investment and discourages transactions. So there's probably some kind of trade-off there that they need to make. I mean, I think overall, we can all win here in terms of those who want more state spending and those who want lower taxes if we have a bigger economy. And that should be the essential question of how we achieve that. Now, one way we achieve that is through, as Tom's fantastic report with the Tax Foundation CPS report on tax reform would probably boost the UK economy hugely. Just one kind of particular tax reform, abolishing what we call the factory tax and providing full investment allowances could boost the economy by boosting investment, and exactly what we need. But at the same time, I think there's probably also a discussion about other ways in which the government is hugely detrimental to the economy. And I think here particularly about red tape and regulation that can often be bigger costs to business than tax. And if we can start jumping into the regulatory state, that beast of a universe that never seems to stop and just kind of goes and grows and grows and grows year after year after year. We could probably boost a lot of productivity in the process, in the economy, reduce a lot of business costs and be able to raise more revenue for things we want to spend on, as well as have a bigger private sector and higher incomes. It's just about going back and making those kind of arguments for.
Yeah, I mean, what worries me there, Matt, is that sort of everybody agrees that we need more growth in the economy, especially after this pandemic. But the minute you actually put on the table the things that would have you a meaningful chance of getting there, they're all ruled out as politically impossible. You know, we can't liberalise the labour market. There's no way we can, cut high marginal rates of tax at the top. There's no way we can take on these regulators. It's all health and safety, don't you know? And you end up with the Prime Minister giving a speech basically in which he says, well, we're all buccaneering, enterprising Brits, don't you know? As if that of itself will sort of add 0.4% to GDP. I guess you're absolutely bloody nowhere unless you're willing to take those tough decisions. And do you think, Matt, on the regulatory side, that, intellectually, I agree with you. Policy terms, I agree with you. I think a huge amount could be done. And the IEA's Regulatory Affairs Unit will be pouring out suggestions next year. But do you think it's politically feasible, or the opposition to almost any meaningful regulatory reform? Because sometimes we point at the obscure ones. I remember Nick Clegg pointing out there was a regulation that made it, I think it was illegal to sell a grey squirrel in Britain. Well, you might want to repeal that piece of regulation, but it's hardly going to lead to a massive boost in GDP as the squirrel selling industry takes off in every corner of the land. So do you think regulation, Matt, is an area in which there might be the political will to do something meaningful?
The political economy of it is very difficult because often regulations have a very narrow, loud set of advocates, and making the case against it can be very difficult because the costs are dispersed in a kind of classic public choice challenge. It's not impossible. I mean, the Trump administration did quite successfully managed to go through a bunch of different red tape and regulation, cut them. Some of it will come back under Biden. Some of it will remain gone as a result of legislative changes. Yeah. So I think potentially it's something that you can only do if you start to focus on. I don't think the government has focused on it very much, particularly in the last couple of years. I think the Cameron Osborne era, there was a bit of a bigger focus on red tape. I'm not sure, as you said, whether it achieved a lot. But I think there's potential ways you can go about trying to quantify and then trying to set goals and targets to reduce it, and trying to find ways. I mean, ideally, red tape cutting should be uncontroversial, because if you can cut what is truly red tape, what is unnecessary regulation above what you need to achieve a certain goal, is just kind of unnecessary paperwork, let's say, it doesn't necessarily have to strike opposition. You just have to identify what those changes are to simplify things.
Okay, let's, Duncan and Tom, I'll get your closing thoughts on the fiscal side, because I think quite a lot of us who were hawkish 10 years ago might be a bit more dovish now on the nature of the government balance sheet. There's a kind of, well, obviously there's a one-off hit on all this spending on dealing with the pandemic, whatever, more healthcare spending and furlough schemes and all of the rest of it. Duncan, do you think the right way to approach this is to amortize the debt like a war debt over, sake of argument, 20 years? Let's say, sake of argument, we've spent 400 billion, and just say, right, for the next 20 years, we're going to run 20 billion pound surpluses at least, and pay it off over a generation. So to make this a very long-term problem, is that the best way of dealing with this particular issue on the spending side? I know the TPA will have a whole list of government projects like HS2 that they'd want cancelled as well. But on the specific issue of the cost of COVID, is that the best way of dealing with the legacy on the government's balance sheet?
I think intellectually that's perfectly coherent, but again, it goes back to my original point of this would remove some of the pressure from the government, effectively separating out the debt which has been accumulated since March, principally through the furlough scheme, but then inevitably when quite a few of the CBILS loans guarantees go south, this situation will worsen substantially. I think slicing the two of those up is a little bit dangerous, because ultimately the pressure which should have been there for the government before we arrived at the current situation, I think, will diminish. So coherent, but I think that the general picture and where we were before this is concerning. And again, what the
so it's a brilliant scheme, but it makes the Taxpayers Alliance job more difficult, right?
Well, yes, but the situation, with Sunak, for example, laying out in middle of March, I think it was, the budget with investment spending, actual investment spending, capital spending, rather than investment spending, which seems to be this sort of bizarre alternative word which most politicians seem to use for basically any government spending. That was to go up to, I think, about £100 billion by the end of this Parliament. There seems to be no desire to limit the levelling up agenda, whatever that really means. And so, kind of almost over intellectualizing that separation and sort of amortizing the debt in that particular way, I think will again just encourage the government to shrug shoulder and ignore the deeper problem which was presented to the country before we arrived at where we are.
There you go, Tom. I've now got the same problem you were complaining about earlier. I'm seen as a bit of a soft, limp-wristed, sort of wet left, not keeping enough pressure on the spending side. What's your approach, Tom, to how we should treat the kind of legacy? It's obviously not a legacy yet. We're still going through it, but the kind of one-off hit of COVID, how should we kind of think about that or treat it on the government's balance sheet?
Yeah, honestly, Mark, I'm closer to your view on this. I think when we look at the one-off hit from COVID, it makes sense to just pay that back over a long period of time. And I recognise, what Duncan's saying about that, reducing the political pressure on government. But the problem is, I think, if that political pressure is brought to bear in the short term, it's going to mean higher taxes. It's going to be sort of counterproductive from a long-run perspective. I think the really crucial thing, though, is to separate out one-off spending as a result of a pandemic, which was largely unavoidable and I think welcome even from a free market perspective for the most part. Separate that out from the longer-run fiscal challenges that we have. Frankly, I don't think that we're going to have a huge amount of progress if we do another round of sort of 2010 onward style austerity, where you sort of do things like hold down public sector pay, hold down benefits, sort of slice a cheese grater across government departments and just sort of pressure down on their budgets. You can have some short-term success like that, but you tend to build up a backlash, you tend to build up resentment, and you tend to get the pendulum just swing in the opposite direction. You end up where you started another couple of governments down the line. So really, when we look at reducing spending and sort of the long-term burden of the welfare state, we have to think properly about reform. We have to think about the more radical big picture things that, of course, the IEA and the ASI and the Taxpayers Alliance and my own outfit have a long history of working on. We can't take the post-1945 welfare state as a given that will be with us forevermore, because the way demographics have shifted, it probably isn't going to be sustainable. And the sooner we realise that and start to think about how we can deal with it, I think the better.
Gentlemen, thanks very much for joining us. I've quoted Ronald Reagan once already. I'll quote him again. He once famously said, "There are no easy solutions, but there are simple solutions." They might be politically unpalatable, but if you think in a logical way, they're pretty straightforward. Duncan, Tom, Matt, thank you very much for joining us. Good luck with your ongoing endeavours. Thank you for watching us on YouTube. If you haven't yet subscribed, please hit the subscription button and the notification bell. And if you've enjoyed this discussion, give us the thumbs up. Look forward to speaking to you again. Enjoy the rest of your day. Over and out.